Our next speaker is Alberto Emprin, a general partner of 3LB Seed Capital and chairman at Excellis. Alberto, the floor is yours.
Yes, nice to meet you all. Of course, my perspective is the one of an early investor in an early stage space company based here in Europe. So somehow, of course, I find a lot of similarity, and I'm pretty aligned with what Mr. Khaled told about his activity. Things have changed really in the last 2 years, of course, because of the geopolitical events, already starting from the COVID, putting in questions, resilience, and then, of course, sovereignty, given the geopolitical situation. And this, of course, has changed a lot also from the perspective of early stage space and aerospace company and all the deep tech company that works around the space. We are investing in space, but we also are investing in a lot of other deep tech enabling technology like silicon, like new materials and so on. So in our perspective, we seek our targets in companies coming out from high-ranked European research center, also in Switzerland and UK, of course. And what we have seen in the last 2 or 3 years, first of all, clearly the US remains the largest investors, the more mature market. There is no doubt about this. And still, 5 years ago, the dream of for an early investor in a startups was to see a European space company faster scale up in Europe and then moving quickly to US because the market was there. And I would say it still is in this way. But today we see the opportunity of growing at the European level with an approach to sovereignty and with an horizon that is not really necessarily an IPO or a mega acquisition at unicorn status, but rather the potential for a company to grow in 4, 5, 6 years to become a credible deep tech company operating in space that could be really a target for an internal acquisition from the key player in Europe, or also for private equity funds that want to aggregate those capabilities and making value out of this capabilities. So our perspective is in a certain way changed a little bit. We really look when we invest and what is the first of all, of course, the strength of the starting point. We don't want just that there always must be a kind of strong IP, an approach that is different from other companies in approaching in trying to solve a certain problem. It could be sensors, it could be let's say a AI infrastructure or approach to, for instance, autonomy operations, things like this. And we look at really where reasonably could be without too much capital a company could get in 4 or 5 years from now. And I would say that under this perspective, we believe that the opportunities have been changed exactly because we see this say more regional in terms of European aggregation opportunity, M&A opportunity, more strong. Of course, when the value of the company really start to stand out, we always seek also for our company to seek for US VCs and to have a try into the US market. But we also, what we have seen is that compared to 4 or 5 years ago, I think the time required for a company to go from, let's say, pre-seed to Series A is somehow shortened. It's shortened because from one side, there is more competition at the early stage. And so maybe finding the early investors in the pre-seed or seed rounds has become more challenging. Although company at that level can still rely on grants, on ESA grants or EU grants or national grants. And this makes possible for the company to mature a little bit more and coming to raising capital from VCs a little later compared to the past. On the other side, exactly because of what the phenomenon, I would say, if company after 4 or 5 years start to have really contracts from European customers, non-US customers, that could be Asiatic customer, can be from Gulf-based customers, then there is a pivot point in which the companies can really set either to develop in the States and raising money in the States. But now there is also a legitimate, at least from an investor perspective, a legitimate aspiration to have those companies get acquired and integrated into other companies, other conglomerates. And so, yes, this is what really has changed, I think, in the last 2 or 3 years. I think that at the early stage level, Europe now is very prolific, is very probably more than US, I would say. As a matter of fact, you see much more early stage investment in EU than in US. Of course, it's still an ecosystem that is maturing, but is still well behind US. Regarding the segments, I think the race for the launchers in a certain way is going quickly to end, in the sense that there are 3 or 4 large players that have captured enough capital to try to reach the market, not say that they will succeed. So in the let's say in the infrastructure, we look much more, and was mentioned before, pick and shovel kind of company that have niche technologies that can improve performance across different potential customers. In the orbital logistics, I think that also orbital logistics is becoming a kind of infrastructure part, an infrastructure part of the segment. We invested almost more than 10 years ago in the orbit, which in the meanwhile have changed completely its mission, and today has become one of the European leader in orbital logistics. And I think the good thing about having a strong or a few strong orbital logistic companies is also that they are helping the ecosystem, the European ecosystem, to have a easier access to IOD in orbit demonstrations compared to the past. So also, once the company has developed and tested the technology and is ready to make IOD, there has been an acceleration in this phase. So I would say longer time to raise your first money, but once you have raised your first money and you have made an IOD, capital and the capability to scale up your technology has become relatively faster. And then you come to a point in which you have to decide what to do, move to US, expand to US, or become a kind of European-centered player in search for an early exit, let's say. Just a few words about the downstream. I agree today is not possible to sell just pixel. You sell interpreted data, you serve valuable services. And I see more and more also companies that start from data analysis and that they are interfacing or integrating space Earth observation capability in-house, just to build a vertical stack of technology and being able really to serve very specific customers. It's becoming harder and harder just to live already having managing directly Earth observation constellation is very challenging. Is even more if you are just a generalist Earth observation provider that takes image and sell the image to the market. Those days are gone. AI is also helping in creating a lot of value, especially when you start to consider the opportunity to merging satellite data with ground data and other origin data and creating value of this data integration. We strongly believe in this, and we are evaluating some investment in that area. And then finally, this is probably specific to Europe, but not only. Helping in making, we are not going rid of regulation in a very short time, and probably in Europe will never be possible. But we see more and more companies that are using also AI and other tools to really automate as much as possible all the regulatory processes to make basically simpler and faster to be compliant with local rules for launching, for operating assets in space. And this is maybe is a relatively local domain, but for us as early investor, again, is interesting. I repeat, the fact of investing in a very early stage give us a double horizon. Of course, we in a lot of moonshots, we can have a very long-term expectations, but we always keep, when we invest, a, let's say, more medium-term horizon, that is that exit through acquisition or exit through integration of company together.
Thank you so much. And one question from my side, like, do you think that in the future, you as an investor will have more like M&A exits or like secondary market exits and IPO exits? And do you consider GCC a strategic region for you to have like some exits with sovereign funds or like local family offices?
Yeah, what I was saying is that to me is happening a bit what was happening in pharma 20 years ago. Big players in defense or in space have a limited flexibility in innovating, a limited flexibility in really keep up with the requirements of the market. On the other side, they are very solid from the financial point of view, from the commercial point of view. So you see little by little. I mean, we supported, for instance, a propulsion company that now is participated by Avio, and although Avio, of course, is doing a lot of propulsion, was missing that segment. It's a bit a lack for, as a pity for potential investor that did invest in that company, although the founders of the company and the very early business angel investor that invested in the company today have cashed good returns. So yes, I think that definitely we also, the mentality of the big players are changing. Probably we need still a lot of flexibility from the regulatory point of view, from the antitrust point of view. I must say also the pressure from buyers from Asia is also there, from US and from Asia is very strong. This is a European existential problem to see that startups are research leads to startups. Startup grows internally, financed maybe but a lot by public grants, then a little by local venture capitalists, and then in the end are acquired or invested heavily by foreigner investors. This I think will be still something that you cannot avoid, and maybe you are also looking for, but at the same time, I think that as the more the market mature, the more M&A and I also trust a lot of private equity specialized funds that will aggregate medium-sized emerging aerospace company to create integrated industrial conglomerate that will be also competitive on the global market. So yes, I think that this is absolutely a legitimate expectation for startups to get to that order of exit. And we are talking, to give you an idea, we are talking about companies that maybe get to making 50 to 100 millions revenues, and that can be acquired by $500,000 to 1 billion euros in terms of acquisition.
Super, thank you so much. It was a very valuable opinion.